First tonight, China is raising tariffs on U.S. imports to 84%, the latest tit-for-tat move that threatens billions of dollars of trade between the world's two biggest economies. China announced the additional tax shortly after an extra 50% levy came into force on Chinese goods sold in America. Beijing blamed Washington for the escalation, saying President Trump was piling mistake upon mistake. Mr. Trump has imposed a new round of what he calls his explosive global tariffs. About 60 countries, which he labels the worst offenders, will now be charged higher import taxes from today. Some Chinese goods will face tariffs of more than 100% after Beijing refused to drop its retaliatory levies on U.S. goods. President Trump is making it clear that there are even more levies to come, with what he called a major tariff on pharmaceutical imports. He said it would incentivize drugs companies to move their operations to the U.S.
The Chinese people's legitimate right to development is inalienable. China's sovereignty, security and development interests are inviolable. We will continue to take firm and forceful measures to safeguard our legitimate rights and interests.
Well, the deepening global trade war has provoked further turmoil on the world's stock markets after Donald Trump's new tariffs came into force. European shares have fallen again, and there are also sharp drops in Asia. Japan's Nikkei ended the day nearly 5% lower. Taiwan's stock market also fell sharply. Elsewhere in Australia, stock prices swung wildly, wiping tens of billions of dollars from the market. Shares in Indian drugs companies fell sharply. South Korea has unveiled a $2 billion emergency support package for its car producers. And the head of the South Asia regional bloc, ASEAN, says it needs to accelerate economic integration to help it to deal with the impact of the sweeping U.S. tariffs. ASEAN's most productive manufacturing countries have been particularly hard hit, with tariff rates of up to 49%. The market in U.S. government debt has also been hit hard. U.S. Treasury bonds are traditionally seen as a safe asset during market turmoil, but there's been a big sell-off. Well, for more on all this, I'm joined now on the line from Palm Beach, Florida, by the Wall Street correspondent for Business Insider, Reed Alexander. Reed, thank you very much indeed for joining us today. So Donald Trump has pushed his red button and detonated what he himself has described as his explosive tariffs. I mean, how have the markets been reacting to today's events?
Yeah, well, since we last spoke, Charles, and it's nice to see you again, it does feel like all of this blue skying and theorizing about what could happen and all of the market volatility we saw, it's all been confirmed because, of course, the tariffs have gone into effect as of overnight Wednesday here in the United States. And, the markets are not handling it very well. U.S. markets continue to experience extreme volatility. We have seen some recovery on the Dow Jones Industrial Average and the S&P, and that is largely because of two factors. One, some people buying stocks buy at the dip, so they see corporate valuations falling, they see stock prices tumbling, and they think now's the time to bulk up my portfolio. So that can drive up trading a little bit. That does help. But also because some traders seem to be responding favorably to the U.S. Treasury Secretary, the top economic official in the Trump administration, Scott Bessent, saying that he would take a more active role in negotiations with foreign countries. Wall Street seems to feel confident in his judgment, more so than some of the other Trump leadership involved with these tariffs. It is important to note, though, that Asian markets, as you mentioned, facing a lot of trouble. The Nikkei, the South Korean Kospi, and Seoul. The only place we've really seen a bright spot in Asian trading, and this may surprise you, is actually on the Chinese indices, on the Shanghai Composite and the Hang Seng in Hong Kong. Not to say that they're doing splendidly, but they are recovering slightly. And that's really the result of two things. China trying to stabilize volatility by hitting back with these retaliatory tariffs, and also pumping liquidity into the capital markets through sovereign wealth funds, et cetera, just to try and make more capital available and console nervous investors in East Asia. So surprisingly, China doing a little bit better than we would have thought.
And there is one development, Reid, that is raising eyebrows to a new height, and that's a major sell-off in US Treasury bonds. I mean, in other words, long-term US government debt. It's normally considered the safest of safe bets for the markets. Why is this sell-off unusual?
Yeah, well, I don't think anything is considered safe right now for investors. A lot of banks that are issuing loans or bonds are also pulling back on how much lending they're doing. This is partially a result of a lot of anxiety around consumer spending. Banks lend money, they issue bonds, they issue treasuries, and consumers are widely thought as a result of this trade war to be facing now the very high likelihood of defaults on their loans and being unable to pay back credit. There are a lot of concerns around whether there could be a recession and how that could impact consumer spending. So I think we're seeing more of an indexing toward commodities. You and I have talked about how gold is increasing in value away from some of these other instruments that would more conventionally be seen as safe, because investors just feel like nothing is safe right now. There's just so much uncertainty. I was talking to a Wall Street banker today, and the word of the day on Wall Street is uncertainty. And if Wall Street got two words of the day, it would be on edge, because nobody knows what's going to come out of Washington right now. So anything affiliated with government debt instruments or capital markets lending instruments, I think, are very tenuous right now.
And as you said, one thing the markets don't like is uncertainty. And given how these bonds that you were talking about, Reid, how many of these bonds that China holds, I mean, is there any suggestion that there may be some deliberate sell-off?
Probably. I've seen a little bit of that. It's not coming up in the conversations I'm having with financiers right now, but I have seen concerns that there could be a deliberate sell-off of some of these bonds. I think right now, what would govern decision-making like that is there going to be any détente or cooling of tensions? It's a little early to know, because this situation is just so convoluted and changes by the hour. It feels like every hour there's some sort of dramatic market swing based on something that some official said, or the telegraphing of one country hit with high tariffs saying, no, we're willing to come to the table. And that drives up a little bit of trading. I don't think things are really going to stabilize for a couple of weeks. So I don't know we'll know the answer to those questions. We're just going to have to wait and see and kind of follow the heartbeats of the market as, different international actors make clear their plans, and then investors respond in kind. Nobody's taking any decisions they can avoid taking right now. There's almost a stasis in decision making as everybody says, let's wait and allow the dust to settle before we decide if one company may buy another, if we may extend a loan, etc. It's just too unclear.
Indeed, and none of today's tariffs are steeper than the levies imposed on China, with levies on some goods as high as 104%. I mean, the Chinese, of course, projecting a steely resolve, have retaliated with 84% taxes on US goods. How punishing are these tariffs likely to be on both sides?
Not good. Not good. Listen, US agriculture producers are selling a lot of agricultural goods into China. It's going to make things very difficult there. The United States is the world's single biggest importer of, everything, and its biggest seller that it's buying from, its biggest provider is China. The US is the biggest client of the Chinese marketplace when it comes to international shipments. China struggles to get certain things into country, like the materials to make semiconductors, which are very important for chip making, or artificial intelligence, which is sort of underpinning all technological development today. This is very, very toxic, for both sides, what these two countries are doing to each other. I don't know that either country sees an off-ramp right now. There's also a lot of bravado, sort of like machismo involved in this. Neither side wants to blink to the other and telegraph to its citizenry that one country or another is going to have the upper hand on this. In fact, President Trump saying last night, that past US presidents might have permitted China to behave in a certain way that President Trump, accuses them of behaving. And he said, it's not going to happen. It's not going to happen under President Trump. And then, of course, you see very strong statements from MOFA, the Ministry of Foreign Affairs in Beijing, and then this 84% reciprocal tariff. It just doesn't seem like there's off ramps here. And really, the losers are shoppers, are people who are going to have less money to spend. There's going to be a lot of economic headwinds, potentially with some sort of recessionary event. We don't know if that will happen. These are two world superpowers that have their arms inextricably wrapped around each other and in the same time are, plunging the knife into each other's backs. You can imagine how that would be an inconvenient, relationship, inconvenient dalliance.
Indeed. And of course, we've been talking a lot, Reed, about the way the world sees these tariffs. But I mean, how are the tariffs being seen in the US where you are, for example, with blue collar workers, who are the people President Trump says he's trying to help?
Yeah, I don't know that they're really fully comprehended yet. There are a lot of different electorates and constituencies in the United States that have important things to say about this. The core Trump base, as I've just anecdotally talked to some very ardent, Trump supporters who voted for him in the election, I haven't heard from those people that they're very rattled by this. The refrain you keep hearing from investors, pro-Trump investors who may be losing money is, it's going to come back. The market's going to come back. It always does. It's going to come back. Then you talk to another set of people, say Wall Street executives, banking executives, who are very concerned because they rightly point out that in the first Trump administration from 2016 to 2020, the president back then was routinely pointing to the health of the markets as a referendum on how well he was doing in office. There's no real health to point to right now. And it seems like the administration cares less about using that as a benchmark for success, which means that some investors think, well, perhaps they're willing to let the market hang out and dry. Then you get another group of Republicans who are in President Trump's party who are saying they're very concerned about this. Republicans on Capitol Hill. There are some who are being supportive of the president publicly, but there are also high-ranking Republican members of the Congress who held a hearing with one of President Trump's top advisors on trade and said they couldn't understand the rationale behind this, and they were concerned, and they wanted to claw back some federal governmental power to control tariffs and trade for the legislative branch of government, the highest lawmaking body, away from the White House. So you are seeing these cracks start to take shape, and I think if conditions deteriorate further, those cracks will turn into fissures, will turn into schisms, and could make it more difficult to govern, even though President Trump has what we would call a mandate across the board. He has control of the legislature. He obviously has control of the White House, and he has a lot of support in the courts. So, there are signs of some disagreements brewing.
Well, I mean, just as we round up this very interesting conversation, for a lot of countries that are badly affected, I mean, their message until now has been don't retaliate like China, instead negotiate. And they're all sending delegations to Washington. But it's a long queue with a long line of people, isn't it? And Donald Trump seems to be reveling in all this. I mean, we heard him saying just recently that they're all coming to kiss his ass, to use his language.
Well, Charles, you're not wrong. Listen, this is a president who has made clear for the past, better part of 10 years, a decade that we've been watching this, that he enjoys, when people genuflect at the knee and are, pandering for his blessing. And I don't think that that's really a partisan statement. That's just his leadership style. We've seen high-level Trump administration officials in recent days say that there are dozens, quite literally dozens. I've seen it range from 50 to 80 countries that are apparently beating down Washington's door saying, wait, take a breath, take a pause, let us negotiate with you. In fact, those efforts, those overtures by some countries that have gotten hit with tariffs seem to be what's buoying trading in those countries. The Japanese markets, were a little bit emboldened in recent days, even though they've had some real problems, by the idea that Japan might be one of the first countries in the door to get a seat at the table to try and renegotiate. India has made very clear they want the world to know that they're trying to come to the table and offer concessions. And at the heart of this is President Trump, who probably on some level is enjoying, that he is cracking the whip with the world order, as it were. But who knows, what anyone's really thinking, and who knows what concessions will look like, and who knows how serious these tariffs may actually prove to be. In a year, we could be saying that it was a couple of rough months, but a lot of this melted away. or we could be looking at a world order that's been dramatically changed in terms of commercial activity. We just don't know. Like, the lesson that we're learning is you don't know in an environment like this, and you can try to read the tea leaves and you can be wrong 10 times out of 10. So I think that's really at the heart of everybody scratching their heads saying, what's going to happen to my money? What's going to happen to governmental relations? We do not know the answer.
Well, the one thing we know is that we certainly enjoyed your analysis and the way that you put things with
Thank you.
Incredible clarity. Thank you very much indeed. Reed Alexander is a Wall Street correspondent for Business Insider. He was talking to me on the line there from Palm Beach, Florida.